Lots and lots of new apartment supply in San Antonio in fourth quarter. Is this the start of a big wave to come? And what does it all mean for apartment fundamentals? Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons, your Alamo City update. New supply emerged as the key storyline in the San Antonio apartment market at the end of 2012. Take a look at the nation's leaders for quarterly inventory growth in Q4. This is the expansion rate of the apartment base, 1.2% growth in San Antonio. No other market came within 40 basis points of that clip. Orange County, Austin, Seattle, and Portland all a good bit behind San Antonio. The Alamo City added 1,911 units in fourth quarter, and over the past 2 decades, the metro has topped that figure only 4 times. 1998, 2006, and twice in 2009. So what effect did all of this new supply have on the apartment market? Well, Q4 is obviously traditionally a slower leasing period, and so quarterly revenue change ended up being in negative territory for the first time in 8 quarters, and revenues fell 1.4% in the quarter. Now, most of the loss came on the occupancy side. Occupancy down 120 basis points in Q4 to 93.2%. New supply and lease up obviously contributed most of that loss, but we did see some net move-outs from the existing product base as well. Year over year, though, occupancy was still up 20 basis points. And for San Antonio, a rate of 93.2% is not a bad number. It's about a half a point above the decade average. Rents, same-store rental rates down 0.2% quarter over quarter. That was the metro's first quarterly decline in 8 quarters, and it's a sharp drop from that 2.3% hike in Q3. Year over year, rents up 3.5%. That compares to a hike of 4.6% in 2011. But even 3.5% growth in 2012, that still tops the U.S. average by 50 basis points, so not too much to complain about there. The big question, though, is how much more new supply is coming up. Clearly, new supply played a big role in apartment fundamentals weakening in Q4. Will that remain the story going forward? And the answer is, perhaps surprisingly, not really. San Antonio added those 1,911 units in Q4, but that is not a number that's going to be sustained by any means going into 2013. New supply is slated to top 1,000 units in only one of the next 4 quarters, as you can see on this chart here. And the calendar year completions tally for 2013 should come in just under the 3,000 unit mark, on par with the 2012 number, and still less than half of the peak level seen prior to the recession. So in other words, that fourth quarter surge should prove to be something of an outlier. And that makes San Antonio a little bit different from the other Texas markets where new supply is expected to ramp up and play a bigger role in 2013. And that's what gives San Antonio's apartment market some upside potential for the next year. We think San Antonio could actually generate better revenue growth in 2013 than it did in 2012. We're forecasting occupancy growth of 100 basis points and for rents to jump 3.8%. And that wraps us up for San Antonio. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.